So let's talk about the moneyness of the option. Every time a call has an intrinsic value, we call it in the money call. So if I talk about one particular stock of Tesla Incorporation, which is having a strike price of $660, and the current market price increases and it reaches towards $678.90, as we know. So in this case, we know that this call option is having an intrinsic value of 678.90 minus $660, which comes to 18.90. So we call it that call is in the money. In the money means the call price is above its strike price, that it's having some in the moneyness, it's having some of the intrinsic value. At the same time, if I talk that do this put of exercise price of 660 is in the money, you will say no, because put is always for downside and the price is above the strike price, which means that it's not in the money. So if I talk about the put, then put is right now treated as out of the money. So if the stock price is above the strike price, the call is known as in the money, which means that it is having some intrinsic value. And if we talk about put, then put is out of the money in this case. If we talk about the moneyness of the option again, and the price of the stock keep on reducing and it reduces to an extent towards 600. Now in this case, you will say put is in the money because you are having a strike price of 680 and put is always for downside. So the price of the stock is below the strike price. So you will call it put is in the money, and put is having some intrinsic value. So conclusively, we can say that if some option is having some intrinsic value, it means that if the put is having intrinsic value, it means that it's in the money. So here in case put is in the money and call is out of the money. If I show you some charts, you can see that I have chosen the call option and the call option which are in the money. So the price of Tesla is 678.90. So all the strike price which are below this 678 or 678 around nearby area, those strike price will be in the money strike prices. Now you will see that these all call options are being shown as in the money call option, and last call option, which was for 2nd July expiry, it is having 677.80 strike price, which is in the money, because in the money, for being in the money, the stock price needs to be above the strike price. And if I talk about the put in the money prices, and the strike price will be above the market price. So in our example, the strike price is different, but your market price is 678.90. So all the prices which are above the 678.90 will be treated as and will have some in the money put option. So these all prices are above the market price. As you can see, these all strike prices. So this is known as in the moneyness and out of the moneyness. There is another thing which is known as lastly at the money. When the strike price and the stock price both are at the same level, we call it that call and put are at the money. So moneyness is an important concept for understanding because this word is being used multiple times whenever we study any of the options strategy.